When you finish watching this video, you will know a magic formula, which I call a billionaire's formula, that will allow you to invest in ETFs wisely and simply. The global ETF market now exceeds $10 trillion in assets, with trillions more traded each day. This explosive growth has transformed ETFs into a dominant force in the investment landscape. But many people think they're too complex, that they're only for seasoned investors or financial experts, they're better or worse than mutual funds and so on. But that's a misconception. Let's see what Dave Ramsey has to say about ETFs.
It's a group of a group of stocks. And if you're buying an exchange, typically what people will do for an ETF is something like an index fund, like an S&P 500. And so it'd just be a group of stocks in there. Now, sometimes brokers will try to get you to buy and sell in your portfolio a lot, and they like an exchange-traded fund for that better. And so if you're setting it up to do, like you'd set up a brokerage account to buy and sell stocks in, I would not use it for that. But if you're using it like a mutual fund just to buy and hold, you're going to find it's almost identical, that you're not going to notice any difference in the practical use of it. So sometimes I hear things like, well, Dave Ramsey's against ETFs. I'm not against ETFs. I don't mind. What I want you to have is a diversified portfolio. Mutual funds, ETF, is either one of those. I give it to you. What I don't want you to do with an ETF is start buying and selling all the time.
Well, Dave, I agree and same time disagree with you on this one. You definitely should not gamble ETFs, but ETFs are not the same as mutual funds, and let me explain why. First, costs and fees. ETFs generally have lower expense ratios due to passive management and operational efficiencies. They also typically do not have front-end or back-end load fees. Second, tax efficiency. Because of minimized capital gains distributions to shareholders, ETFs are often more tax efficient. So you can save on fees, taxes, and capital gain distribution all in one. So how do we choose and invest in ETFs wisely and simply? First of all, we need to know that there are several types of ETFs. 1. Equity ETFs. Focus. Invest in stocks, tracking indices like the S&P 500 or specific sectors, technology, healthcare, etc. Examples: SPY tracks S&P 500, QQQ tracks NASDAQ 100, XLV tracks healthcare sector. Purpose: provide diversified exposure to the stock market or specific segments, seeking capital growth. 2. Fixed income ETFs. Focus: invest in bonds and other fixed income securities, tracking bond indices or specific maturity ranges. Examples: a GG tracks U.S. Aggregate Bond Index. BND tracks total bond market. Purpose: offer exposure to the bond market, generating income and potentially providing stability to a portfolio. 3. Commodity ETFs. Focus: track the performance of commodities like gold, oil, natural gas, or agricultural products. Examples: GLD tracks gold, USO tracks crude oil. Purpose: provide access to commodities, often used as a hedge against inflation or for diversification. For more examples and detailed information, check my description below. You might stop the video and read all examples because it's also a part of formula. As soon as you know what types of ETFs exist, your decision-making becomes easier. You might like technology industry, and accordingly, QQQ ETF that tracks NASDAQ index could be a good fit for you. Or maybe you like real estate sector, and VNQ ETF that tracks REIT index might become a favorite. Check my previous video to know what REIT stands for and what purpose they have. Now that you've chosen your favorite ETF, what's the best way to invest in them? As Dave Ramsey mentioned previously, fast trading on ETFs are not advised unless you are an experienced day trader and have required skills. Otherwise, first recommendation would be to buy and hold for long term. While you hold assets for many years, you can still use a technique called dollar cost averaging, which I talk about in my first video. With DCA, you invest a fixed amount of money into your chosen ETFs at regular intervals, example, monthly or quarterly, regardless of the price. This helps to average out your purchase price over time and reduces the risk of investing a large sum at a market peak. If you want to start investing, I would recommend my partner broker, AvaTrade. It is a reliable and regulated broker. You can get 40% bonus on your first deposit. So hurry up, This offer may not be available for the next week. You can find the link in the description below. And this was Top 3 Tips. Don't forget to subscribe. Thanks for watching.